From the rotunda of the Carnivore compound, deep in the heart of Las Vegas, comes one of Wall Street's Hall of Fame traders, Dutch Masters. Today, Dutch is joined by Carnivore's hand-picked customer protege, who went from being a K-9 cop on the streets of East Tennessee to full-time trader and market strategist, and now heads the Carnivore VIP program. The man who has a guy for anything and always has an answer for everything, even if you didn't ask. Please welcome Godfather.
before we start listening to what he has to say.
Hold on one sec. You muted your 1 second. All right, can you guys hear me now? All right, can you guys come on now? Hold on a minute.
How about that? Everybody good?
Okay, we better now, right? Good deal. Yes.
All right, so listen.
There we go.
Okay, so we got a few minutes before Powell starts talking. We want to listen, so we want to be quiet. You hear what I'm saying? We want to zip it at when he starts talking. I want to hear the first, 10, 15 minutes of what the guy has to say. That's normally when we're going to get. So, it's gone. The sound is gone, they say.
No, guys, you can hear us, right? Yeah. What happened?
Oh, Lisa says it's gone.
No. All right.
Lost.
Here we go. We are now switched over to the hardwire here. All right. We're now hardwire. There we go. Yes.
So stop switching views is what they're saying.
I get it. Well, okay. We will stay just
there
like
we go.
Are.
Okay.
We will not move.
Thank you, G. Wander, man.
I know.
You're the man. Okay, good. Ted Miller, appreciate that, bro. Good to see you, Sal. Good to see you again, Sal. That's awesome. Lost in character. Now that's a great handle.
That about sums me up.
Lost in character.
That's awesome.
All right. Thanks again. Lisa says, didn't hear a word you said on the Fed, said Daryl. Okay, so if everyone can hear me now, what we're talking about is, can you hear me now? Will you stop switching the views? That's what's fucking
Well, I think I don't know what it's doing. What?
Jesus.
Oh my God. No. Look.
What?
We're right here. You said no. See, I think people are like,
right.
She says we're on.
All right. So what I said was the first prepared remarks are in the first 10 minutes or so of what Powell has to say. And so that usually spikes the markets because they like what he has to say because they are the prepared remarks and they're designed to be that way. The second thing is after that, you get to the question and answer period, and that's when people start to ask tough questions, and he answers a little more off the cuff, and things usually can get a little wonky. So we want to hear what he has to say, and if he has started his discussions, we want to know that and switch over to that so we can listen to it all together live here. We cleaned up a bunch of stuff in the account. If there is a big spike early on, then we want to take advantage of that and probably pull off and take profits and pull out of some things and try to preserve as much of the gains as we can get on that spike. I'm not saying there will be one, could be. Let's just wait and see. All right, is he talking yet?
No, you still got, no, you did 4 minutes. You still have.
No, I'm just saying, when does he start talking?
Oh, at 2:00. Yep. So
2:30 is when he does his
press
conference,
right. Well, the minutes come out right at 2:00.
Okay.
Right at 2:00 Eastern time.
Okay.
That's also when the dot plot's going to come out.
So we got a ways to
go. We got stuff to talk about. So.
All right. So let's talk about what we're seeing out there. Biotech's red hot. We had an IPO today, ALAB. Donald Trump's SPAC is up big today. I guess they're trying to force some kind of a vote on whether or not to take that thing public. And Trader Z told me about 4 days ago, start watching DWAC, DWAC. That's the SPAC for Donald Trump Media Enterprises or whatever. And sure enough, here we are today, exploding up 7-8 points, something like that. So the truth is, biotech's hot. The proof is in the pudding because when you have an IPO in that sector and it blasts off like up 23 points above the IPO price, that's your proof that the sector is hot. We kind of already know that. And Alpine had a big day yesterday, ALPN. So we kind of pushed back into that today. And let's see, I want to see kind of where we're at here.
Yeah.
So we kind of pulled things down to instead of about 20 positions, and many of them being small, we're now down to about 12 positions. HIMS has been one of the great off the bottom trades of the year. HIMS. Okay. Stock got way down to, I don't know, $2 or $3 a share, something like that. Started coming off. We started playing it on the way up, on the way up, on the way up. It gapped up, and we're still in it. We got a big unrealized gain in it right now. It's our largest position as of today because we continue to add to it just about every 10 or 15 cents. Our second largest position here is COIN, COIN. We held on to our in full position on that pullback. We did not sell out of it. And so it's continuing to go, come back here for us. Our cost basis on it is running about 236. We were buying it, I think, as high as 256.
Yeah.
Stock's now, what, 240 or 236 again. So
We got it right now. Look, we're at 239.
239.
Right now,
okay.
4%.
So we've had a couple of days. We've had a couple of days of good moves on that. It's tied to what's happening with Bitcoin to a certain extent. I think Bitcoin may have stabilized at least. Who knows whether it goes up or down from here. This is my as you can see, the dog's got a hold of it, right? Can you guys see that? The dog's been eating my hat. They eat everything. I think they ate a couch the other day.
What do you think about what's going on with Bitcoin over there in Argentina? I mean, with their inflation, a lot of people,
so people are blowing out because there's no currency value anymore. So everyone's racing to get into Bitcoin. But how many people in Argentina have a ton of money? I don't know. But anyway, there's that. So
yeah.
All right. Let's talk not just about good stuff, but also about. Oh yeah. So here's another. Fourth or fifth largest position, and it's been a sneaky little winner for us. Picked it off in the 12 areas, and now it's up 13, 14, heading that way. So that's a sneaky little winner. RIG, R-I-G, which is Transocean, obviously drilling rigs for the oil industry. Trader Z and I are seeing a lot of signals in oil and energy. That's been percolating and percolating and percolating and just bidding up. We're seeing like Chesapeake today was doing well. Got a lot of stuff in the energy sector that's kind of vibrating at a pretty high level. We started picking off rig in the low sixes, and now it's the low fives, and it's heading up. It's over 6 now, maybe like 612.
Yeah,
I think our last add to it was at about 620. This is one we had a 660 initial target on. I think the thing continues to go as long as we've got the energy sector moving. If anybody can remember 2022 when nothing else was working,
look at that.
Energy was working. So energy was working when nothing else worked. And so when you see energy working like this, when other things are either paused or not working, you have to realize that when things are tough, sometimes that's the only sector that's really working very well. I want to talk about a subsector that probably a lot of you don't know many of the symbols that are in this sector. And we laid a bunch of them out to our Hall of Fame traders family yesterday. We laid out some of the symbols that are there. If you're a subscriber, you'll be able to go to the wrap yesterday and see all the symbols for this subsector. And what I have to tell you is that the example that I'll throw out there today is BLDR. But there are 13 other companies in that sector that are badass, some of which you'll have trouble finding. But the reality is if you're a subscriber, you get in here. It's a 2-week free trial. Don't be a lame-o. Start doing business with people who make real money for you and stop listening to, the Kramers and the Paynes of the world who throw shit against a wall and hope that it fucking goes up, okay? The reality is that this subsector is righteous as hell, man. There are 10 to 13 stocks in this subsector that we've done a lot of work on. And if you look at the charts in this subsector, you're just going to go, holy smokes, how did I miss these? Okay. So
that's a great pick. I mean,
yeah.
I just pulled up the chart on that and I had to widen my
What kind of
screen.
chart is that? That's like ridiculous.
If you call these three little things the gator, what is this called? This is like the dolphin.
Hey, if anybody out there doesn't know what the alligator indicator is, that's something else that we just taught here at the Academy. By the way, shout out to the Academy members that are here at the mansion. You guys are awesome. I'm so glad you're here. This has been one of the most incredible classes. They're fully engaged. They're asking lots of questions. They're super smart. This has been a lot of fun. Okay. I just got to tell you, this has been a lot of fun. Yeah. They're just, it's great. And, once again, Jay Donk is here cooking.
Oh, man.
Tonight we're gonna have
tonight's tomahawk night.
Tomahawk steak night. I've put on 10 pounds already. This guy is something else. And then we've got, Hippie Chick is here running the show. She's got her whole crew going. I mean, Monica's here, Connor's here. I mean, the crew here is just smoking hot. They're just doing a great job. And
the weather's gorgeous.
These things are fun. The weather's perfect. The ladies are actually sitting out at the pool right now in the bikinis. It's amazing.
Guys, I don't know. Look, with one of my many screens, I'm going to turn on and show you.
What?
Look at the view. Well, you can't see that, but there's mountains out there. Mountains. There's sky. There's gorgeous palm trees. Y'all don't see there's mountains over there, and it's gorgeous. I guess you have to come out to see it, but it's gorgeous out there. But
why are you showing the neighbor's roof?
Well, I had all these cameras here because I don't know which one I can turn off because I don't know which one has the sound in.
Over my left shoulder, we got the new lion. You guys see the new lion? He's the golden lion.
The story on the lion was the funniest thing, but you probably don't want to tell that. What the number you started at and what you ended up getting the lion for.
Yeah.
But Dutch goes around the country and buys things, and he's almost like an old time cowboy guy, and he's like, I'm going to buy this, but you don't know when I'm going to be back to pick it up. So when I come around town again, I'm going to be back for this. I think he bought this lion like a year ago, and he comes back in because he buys this stuff when he's riding on his bike.
We got the Roman warrior downstairs.
I took a picture of you painting
the golden Roman warrior. He's got his own stand, and he's got a shield and a knife. And
we've got about 15 minutes to Powell. I've heard everything from this could be the only information. This could be the only guidance. They got dot plots. There's a lot going on.
All right, so let's talk about what we think is going to happen.
What's going to happen?
Again. Okay, so we don't think there's going to be any rate increase or decrease. No change. So, the market's going to like that, we think, because it needs something to look forward to. And if the market can look forward to a potential decrease in the future, this just kind of kicks the can down the road a little bit for us and allows us to have a decent platform to trade on for the next 3-4 months. January 1st, everybody, we had 6 or 7 rate decreases priced into the market. Crazy. We thought it turns out that I guess it was crazy because now what's happened is the market is pricing in only 3 rate decreases. We think even that might be high. On the other hand, having 1 or 2 makes sense. They're going to say that they're data dependent and that they're going to make the decisions based on what the data comes through. Well, the last data we got was kind of hot. So that's why we don't think there'll be any decrease right now. Hey, if they decide to surprise us with a rate decrease today, I don't even know if that's good or bad, to be honest with you.
It'd be such a shock.
It'd be such a surprise that I don't know what could happen. But
markets don't like surprise. I mean, that's the thing,
really don't.
Right? Markets don't care really, right? If things are bad or good, as long as they know what's going on,
just
right?
Stay cool, man. Just don't surprise us with stuff.
That's it. Dutch don't like surprises either,
No, so I think what happens is we're going to get some good happy talk in the first 10 minutes. Market's going to run up on that. They're going to start asking questions and pull back. That's your opportunity to take profits. So take the profits on that if it comes. Now talking to Trader Z earlier, we had some interesting.
That was great.
So here's what we got.
Oh, that was great.
They don't have a choice but to lower rates probably starting in June. And it starts to make sense when you start thinking about the cost of the debt that we have and paying that debt. And he had a couple other reasons behind it, which I'm too dumb to remember. But the reality is that he kind of said, look, we've got to start dropping those rates. There are some smart guys who agree with him on that. So I'm of a mind to believe that we get nothing here, but we get our first rate drop in June. And that's that. That's all I got. So, other than that, if you guys on the chat are really, I haven't even looked at the chat here.
Yeah,
I want to see if there's any questions on particular issues or anything like that.
So Dutch has got his computer linked in as well. If someone's got something that they're in, we've got a couple of minutes. It's something that we do for our subscribers all the time. But if we've got especially guests out there, you're interested in a chart, we could look it up. We could see what's going on. And obviously, that's a good one.
All right,
leave it up to Frenchie.
They like the 3-camera views. The only thing missing, a drone cam.
We had one last.
Hey, by the way, I was walking the dogs out on this side of the property over here the other day, and this drone came over. Oh man, I wanted to shoot.
It's illegal to shoot a drone.
Well, in Oklahoma, you can shoot it.
Really?
If it comes within 100 feet of your property, you can shoot it. I mean, you got to give it to the people in Oklahoma, right?
Yeah.
I mean, but here, if I shoot it, they'll say I'm like in the city of Las Vegas, so that's illegal. Yeah. I may be close to like the flight path for helicopters.
Well, the hospital over there.
Got the emergency helicopters going to the hospital over there. Yeah, you don't want to be blasting the double hot, up in the air here. So.
And I know that's, oh my God, we got approval from Donk on getting ready to bring you all a kick-ass commercial. Donk said it was okay. We can't tell you what it is.
Oh, this is good. But it involves tanks, machine guns, jeeps, helicopters. Yeah,
it was gonna be fun, and I think I got it recorded.
I think we're destroying some cars.
It is gonna be awesome. I'm so excited for that. But that commercial is gonna be going down. We've got some new commercials coming out. Like I said, someone asked, and you knew it was gonna happen. Frenchie asked about BA.
Yeah, so we covered it. We covered it. So the trade's over with.
We may not have we might not have audio. We cover it here.
What?
On the stream.
We covered it.
We covered it. Okay.
It was a short. We covered it.
Right. There you go.
So it's over.
Oh, we covered it. I got it.
It no longer exists. Not a trade anymore. Right. I'll tell you why. Look, if this thing, it had a pre-market of 177, and then it goes up. They got doors falling off. And they got, for all I know, they got stewardesses flying out the back of these things, and their stock's going up. That's a sign, right?
They're flight attendants now, but
Oh, sorry. I'm sorry. See how old I am and call them stewardesses.
He was asking where the ashtray was in his thing. He said, first class, you don't even get an ashtray.
I said,
what kind of airline
I'm
is this?
firing up in first class, and they're like, you can't do that in here.
It's ridiculous.
I said, geez, I told Donk, I said, you got it. I told you we need our own jet.
You did. No, look, so we covered the short. We told him, Frenchie, you missed that one.
Nah, so we covered the BA. You got to get out of the way when things are coming. Look, I think it's probably still an okay short. It's probably going to go down. We think it goes down to 145. Hey, look, the neighbor's running around without a shirt on. That guy owns a bunch of cannabis stores.
Oh, look, Z is actually on. Look, he actually made sure the
resident genius is here.
Yeah, he's a very humble. He's a very humble individual.
All right, so yeah. So I don't know, the BA thing, we just cover it when it's over. Right? So I forgot. I dropped it off at Denny's. I gave it $10 and said, take a flapjack special, and I don't know your name anymore.
No, I got it. So we've definitely had a lot. AVAV, we talked about that. If you believe in all this war stuff that's going on, AVAV is the perfect.
No, drones, baby.
That's what I said.
Drones and war.
Yeah. So
yeah, AVAV. So yeah, what we said before the last earnings, I think we were in the stock around 123 to 126. Stock jumps to 150 or something on the earnings. Why? Because their earnings or revenue, I think, was up 90% quarter over quarter. Unbelievable, man. So if you're a management team and you make drones and you got, Blinken and these other neocons, blowing up a new country every 3 months,
Right.
And you can't make money, then there's something wrong with you.
No, I agree.
These guys are selling lots of drones.
I agree. I do want to know. I'm asking Connor over here if he could help me maybe get up a poll, but maybe you all could help me. I want to know, what do you think that the reaction to Powell is going to be? Do you think he's going to bring up rates? Do you think he's going to be dovish? I personally think lately he's been the most dovish guy in the room. And then the next several days or whatever, they go on to these obscure channels and then they talk hawkish when less people are listening, except the market makers. And you don't know why stuff's going down.
So Mikey F says I can shoot that drone down with a potato gun.
Okay,
let's do that. Or maybe a paintball gun.
Where the hell do we get a potato gun from?
I don't know.
I know he used to make them as a kid, but I'm not sure. Good chance of dovish. I think that you attract a lot of people like us. I'm just gonna say that. It could be something.
Oh, this is the House. I guess she means like the Congressional House, the House of Representatives, is trying to get Biden to put a large tariff on Chinese drones.
Oh,
why would we buy drones
from China? Oh my God,
That's retarded.
I bet on PDD prior to earnings. And Dutch, I tell you what, he almost lost it. He's like, I'm not buying it. He's like, you're going to get bagged on it. And I tell you
Which
what.
One was it?
And the Pinduoduo, the Timu, live like a quadrillion. PDD.
PDD?
Papa Delta Delta.
China.
Yes, exactly. I had to sell it at before the open. I'll tell you what it did. This thing blew away earnings and it sucked up everything, went all the way down to negative for a moment. It was up, 20% pre-market, went all the way down. And that's why you say to be weary of the China stocks. It's because they don't play correctly, regardless of the political side.
Some of them make you a lot of money, but here's the point. You got to make a ton of money when you're playing the Chinese stocks, because you never know when they're going to basically just say something crazy and the stock goes from 25 to 2. I mean, it's already happened. Okay, I'm not making that up.
No, it's
already
true.
Happened.
It's true.
And back in the day, I remember the day, because I'm old, but I can remember the day when all of their financials were basically fibbed, total lies. They just filed phony financials with the SEC. So, anyway.
We would be remiss if we didn't say what Trader Z is going to say. Bonds have to catch a bid. Right.
Hey, David, thank you for that big contract with the United Air Force today. That's why BA bounced, the big contract with the Air Force. Do you guys think that NEO ever has a shot? Electric vehicles. Phooey.
Phooey. that means no in dog land. That's how when I was a canine handler.
Phooey.
Oh, what happened? Look at that. That's the NEO chart.
That's what I'm telling you. Phooey.
I've been on safer roller coasters.
I mean, we should have never done that Rivian trade. That was my bad, because I let that come. We got the signal, it looked good, and then I'm like, but I didn't take the next step, which is what else is happening in that industry right now. And the reality was, you had Tesla missing numbers and getting, downgraded at other firms. You had Fisker talking about how they might be doing a bankruptcy.
Yeah.
And so the whole industry was getting, battered. And when we put that trade on, it had to lose. And, that was my bad. I eat that. Okay. So NEO, phooey.
So TNA,
not till things happen there.
That has always been a carnivore favorite for some reason.
Purple Music wants to know if I'm going to have an electric motorcycle. Phooey.
Well, I hope so, because I went into that electric motorcycle stock that we bought earlier in the year, and I still have like 10,000 shares of it.
No.
So
I say to the dogs, no.
She's like, no. Do you? And what does she say back?
To the dogs?
Yeah.
She goes, oh. She chirps at me. So, hey, can I get a picture of my motorcycle that we just bought yesterday?
It took everything I could to get sound on, and you want me to somehow bring a motorcycle?
I want to do a magic. Well, maybe I can find it.
Yeah, you can. You're sharing your screen. Yeah, because you didn't share.
Well, I'm not sharing it right now, am I?
No.
Oh, I am sharing.
Yeah, you had every ability to show
screen sharing.
No, don't stop.
All right, I won't stop.
Oh, here we go. Here you go. Look.
Oh, look at
Look at that.
Oh, I see what you're saying. Okay, so no, don't do it. Put that away.
I told you. All right, guys.
Go back to what you had before.
Okay, there we go.
Now I will go find. Oh, see. Okay, well, I see how this works. Oh,
Okay, good. So we got this.
Quite magical.
Yes. All right,
Okay.
we have a couple minutes. He wants to look that up. Maybe shouldn't the moto cam be
You guys
streamed?
got to see this. Chapa.
Oh, I see what you're saying. Oh, the moto cam. So we're actually looking at this. I brought this up in the chat. The reason why we start about 15, 20 minutes early is in case you all got to get your earpieces in. You're at work. Your significant other is tired of hearing us. This way you can start getting in the right mindset to get prepared for personalities like this. But we're going to start doing what we're calling the carnivore den, where we're going to be opening up a couple hours prior to the end of the day. Let us chat in here, kind of like we're doing between each other. It's going to be something that's going to be private, but on YouTube. Dutch may come on during that time. He may come on, say what he's thinking, show some things, and then jump off. But we are looking to add that as another service for our carnivore family. We're just working on some logistics on that. So
yeah, the technology team is on fire.
We're definitely working around the clock. We're trying to do a couple of really nice, innovative things. So we're excited about that. But back to the market. Well, Dutch is looking up this bike. Definitely going to be it's going to be really interesting to see. The market's kind of not going to know what to do here when this first comes out. They're going to come out first with the dot plot, and they're going to come out with the decision, and then the magic happens when Powell speaks. So my always cue is when he goes up. For me, I usually see a nice raise, then he clears his throat, and then it can either pop or drop. So did you find the bike yet?
Oh, that's pretty cool. I think the guy took it down because
it was sold.
Because I bought it.
Yeah. So this bike, I listened to it run. That one's close enough.
Is that close enough? should we show? So it's kind of like this, right?
All right, y'all. We've got 3 minutes till Powell speaks. Y'all can do me a big favor. Hit the like button. Subscribe if you're not. If you just want to see a real group of guys that really like each other, really just give everything they got for you. We've got the whole team here. Show the support. It's just going to keep getting larger and larger on the stream, and we won't forget those of you that helped us get here. And we love getting to know our carnivore family more and more. For our alumni members, get ready to see something come out at some point for an alumni academy. We're excited about that. There are a couple spots left. You've got like 2 minutes to choose a bike that looks like the one you bought. Yeah. Just pick one, dude.
No, man.
I mean,
Relax,
they all look like it.
And they do not. This one had very special
oh my
smoke
Lord.
and fire. Okay.
All right.
Oh, here we go.
All right.
Oh, hey, this is actually it.
That is it.
So I don't know how to make this big though. Hold on, YouTube. Oh, there we go. Hold on a second. So I share the screen?
Yeah, yeah.
So do it. Share my screen.
Oh, you're still sharing that screen. That doesn't work.
No, you got to find it.
No, look, you're on.
Oh.
So you're sharing your screen.
All right, hold on.
Yeah. So you got to go to that exact same screen.
Here we go.
Well, we gotta switch over to Powell anyways. I gotta go to Powell. We'll show them later. All right, we'll look for it in the wrap. I promise it'll be in there. They'll get mad. We'll get people yelling at us again if we don't go. All right, fine. All right, y'all. We are still here, and we're getting ready to swap. Here we go. Of course, they're not on yet, so
We could be watching my.
well.
I shared it with you.
Yep.
So there you go. Ooh, sexy.
Yeah, they're looking at that. I'm getting the Powell up. So there we go. Well, not live yet. Can't expect them to
Well, I
start.
want some more. So.
Okay.
The Federal Reserve System works every day to support a growing and stable U.S. economy. Across the United States, the Federal Reserve, through its Federal Reserve Education Program, also helps people understand how the economy works, so consumers have the tools to make sound financial decisions.
Here it is. There.
Through this education program, public
What's that? Yeah, when we get decisions from that. We're supposed to be telling them. No, look. Yeah, no, but we still got to discuss what's going on now. Anyone, can y'all see this? Let's get an overlay here. All right. All right, good deal. So y'all are out here in the mansion. Let me come over.
Okay, we got a lot of stock popping. I'd rather watch a motorcycle
I know you
and
would.
read the Fed stuff.
I know.
You know,
I know.
it's like much more fun.
Let's bring this up. All right, we got a lot of stocks that are popping now.
It keeps trying to get rid
Look
of
at
the
SPY is
motorcycle.
rocketing up. You all can still hear us, right? Getting ready to bring out this data as it comes out.
Maybe I should share this video with like all the thousands of carnivores.
Okay.
No, I'm just kidding. You don't.
You don't know. Look at SPY is rocketing up. Do you even have your screen? We can look at some stocks.
Hold on.
We got
All right.
200 people here wanting to see some stock stuff.
What? Yeah. So
Look at RXRX. Oh, I don't.
So let's see. Hold
All
on,
right.
let me see what we got going. All right, let's see if we got it. Whoa, AV taking off. 150 drones, baby. PNR's rocking. Qualcomm just took off. Coin's taking off. We're up 13 pucks on Coin. Glad we got out of Boeing because that's taking off. All right, what else is spiking? HIMS 1645, 1650, SPIR 1760. I think it touched 18 and change yesterday, so I think it's probably good odds there. CRNX, which was down like all day, is in the green, and Alpine is okay.
Dollar is dumping right now, guys.
So we got dollar. Okay, so where's gold? We just sold our gold, so of course that's probably going up. Let's see here.
Let's see. Gold pop. Gold pop.
Popped a little bit. Okay,
Wow.
so the 10 years at 4.27. It's off 0.2. That's okay. Down is better than up. So let's see. Dow's up 118. Nas up 73. Stocks are making their people are making their bets here, right? So have they released the stuff? You don't know.
Yeah, well, I was listening. I was trying to listen, but I was more interested in what you were doing. You know, I was like, oh, that all sounds great. I was more interested in making the money.
What's the Fed? I'm wondering if there's any, should we be blowing out anything? That's the bottom line.
Well, AMD still looks a little weak. Not sure why why that is not going, but I don't know. Here's the question: does the incoming fade start, or does it wait?
Well, that's what I'm doing is I'm checking out. Should I be blowing?
Well, what's that one that's got that
taking
big,
half
huge
of
green thing going on?
Half of these positions should
All
be taken off, or what?
So, y'all, it's funny to sound. So, this is a lot of times what it sounds like when everyone's going through. The guys on the trading desk this is how everyone kind of talks. It keeps everything a little light. This is some really
Hey, look at this. It's a letter from my girlfriend when I was in high school.
right.
Dear Dutch, it looks like you lost a lot of weight. I wish I was still with you.
Coin.
No, she didn't say that.
Yeah, I'm just looking at coin. I just want to see what coin. Give me this computer.
Shut up. Get off of my. Don't leave my mouse alone. I got to make some notes here.
Coin. Look at that thing. Should I buy more? What about band?
Oh, you're such a. You're so FOMO.
Hey, FOMO, I am. You're 100% right. You're so true. Maybe after the 4th Academy, I might get over it. So, guys, if Powell ends up coming out dovish, we should be really good, you know. So we'll see. But the market's definitely shrugging off the meeting. You got a lot of stuff that's popping up with the Alpine. Dutch is writing notes. We are live, so we can just tell them. If you guys see anything out there, let me know. Please post it in the chat. Let's see what you got. If a lot of you all got some really cool screens that you're looking at. If you see something that we're not, I'm not allowed to touch any of my computers. So
hey, if any of you guys are carnivores out there, which I know you are, then this is where we would be taking some profits on if our positions were super big. So, for example, if our position's 150 grand and we'd be more comfortable at 50 grand or 75, we're going to cut half of that position pretty much right now on this pop and this jerk up here.
No, don't take the law. I understand we do not give financial advice. I am not going to take any loss on Nugget. Every time I have taken that, I personally am not. RW5207. It's amazing that screen name wasn't taken. But anyway, so RW5207 says, I'm not going to take my loss on Nugget. Gold's popping.
Yeah, so he's good.
He's good. Good job. Way to go. So yeah, let's see if we reach a high, an all-time high. There's definitely a lot of stuff going on. See if I can find anything on mine. Well, Dutch is writing down a bunch of notes.
I had way too much of RX. I'm taking 2/3 of it off to get comfortable.
Okay. Okay. So for those of y'all that heard that, that's fine. This is one of the reasons why we thought the streams would be really nice. Is you know, you hear it from his mouth right when he's thinking about it. So market is definitely rocketing.
13%.
Let's see. Man, oh man, I tell you what, Royal Caribbean up 3%. I'm so glad that I'm in it, but Monday, geez, wow, there's a lot of stuff just moving here.
RIS, okay.
All right. Coinbase is up to 244, up 6%.
Take some profits on HIMS, maybe take half of that off.
Let's see.
So we had a reversal on PAY, which is good, a reversal of the upside. It was a painful thing to hold for a while here, but it looked like it bottomed the other day and was getting ready to do a reverse. We got the reverse happening today. I think we had the same thing on AVAVs, and that obviously is paying off here today. We actually went into added to it. We added to PNR today, which is also popping right now and looking pretty good. So
bonds are coming down.
One of the things that Trader Z pounded the table on yesterday was, there are certain stocks out there that are high quality that can be bought and kind of casually scaled into over the course of a year for people who are a little more longer term oriented, like moderate 1 year type of time frames. So, we already talked about Qualcomm when it was at 105. We hit that. Then it kind of went all the way up, came back down. It's still in a place where that's a stock that's a high quality stock that, could go another 100 points from here, 90 points from here, in our opinion. But then the other one that he was pounding the table on is Oracle. Okay. So here you got a huge company where there's been a sea change that's taken place. Okay. The change that's taken place is that they used to make most of their money by selling software licenses. And now they've done a good job of converting that to where they're now AI SaaS-based type of business. Their cloud business and their AI business is now revenue has surpassed the license revenue business. So,
right.
And you have a management team there that obviously owns a ton of the stock, and that ship appears to be turning, just this way Qualcomm did. I guess if you had to probably string together 3 or 4 of these top stocks, we like ANET, which is Arista Networks. We like Amazon because a lot of people aren't going to realize until it's too late that Amazon's actually going to be a huge player in the AI space. So you can probably add $100 a share to that one. Oh, there's your dot plot.
Yeah.
Is that what you're looking for?
That's right. Yeah, that's what I was looking for, the dot plot.
Listen to the.
Well, I was just hoping that one of y'all would know how to read it. I mean, I just heard dot plot. I was hoping that
Fed. Look, they're like a bunch of children with little bump. Like my grandma used to go play with. What was that game that grandmas play? Where they have bingo. They got the little thing like those look like, oh look at this, I get to stamp that little circle on a dot plot from the Fed.
No offense to our bingo players out there. I think Jennifer, my wife is out there on a cruise right now, and they're probably getting her on those bingo cards. And the only way to really play is you got to buy the little stampy things like you're talking about. You can't just pole punch them. Like,
look, there's one dude like the guy who makes the umbrellas that go in the drinks, right? That guy. $1 million a day, right? It's the little dot plot guy, the little bingo bumper.
I did, but okay, well, so
there's one guy.
I kept bringing up dot plot. I figured one of you guys knew how to read the damn thing.
Where do you think he is? Like the city of industry, he makes all these things. It's probably down in like Georgia. Something.
I want to ask about Chipotle, because Chipotle is a stock that we in the carnivore land don't get into just because of the size of it. Nobody wants to buy 1 share of anything or 2 shares, but they announced a 50-to-1 stock split. Now, Trader Z was saying today that he loves this industry. There's a lot of things happening. We talked about Celsius. We talked about several.
We're seeing some restaurants, and we're seeing Kava, right? So restaurants and some fashion type companies. And
oh, well, yeah. I mean, that's completely different. God, what happened to Gucci? What happened to Gucci? They went. Yeah. They dropped. China decided they didn't want to buy.
Don't they understand that all they have to do is copy Lululemon?
Well, that's that. Well, yeah.
Slap a Gucci label on it.
I think there's a lot of countries that may have already thought of that potentially. Yeah. But anyways,
copy Lululemon.
50-to-1 split announced for the common shares. So,
I like simplicity.
Okay.
The advertising doesn't need to be fancy. Right.
Well, that's good because I don't know how to do fancy advertising. Right. Check. That's good.
Yeah, but what I'm saying is Lululemon's even too fancy with their advertising.
I got you.
But see, I think
they're not advertising to you.
So see, I think they had some people behind the scenes spreading what the real message is.
I got
Lululemon. You know what it is.
Yeah,
right?
But
you say it.
I'm not going.
You're not going to say it, are you?
No.
See, I can't.
I was looking around for a tinfoil hat. That's the one hat we're missing around here. Is like a tinfoil one, or an armadillo hat.
So the real message. Let's get back on point here. What's the real message that Lululemon wants to get out there, or was successful at getting out there?
That the girls needed to buy these pants.
Why?
Because it makes you're not gonna know. I'm not going down that road. No way. You're just trying to get me in trouble.
Because it does what?
Help! This parachute's an knapsack. Oh my God! Pull cord! This parachute's a knapsack. Help me! Wrong.
All right. I think you all know what we're talking about.
Yes.
So that's good enough.
So either way, so gold is definitely moving up. What do we say? What do we see that we got going on over
If you're walking through Newport Beach or Beverly Hills, what's better than gold? A pair of Lululemon stretch pants.
Oh, look, Hawk says the word is comfortable. We're looking for. It makes them feel comfortable.
Is that what it does?
Why couldn't I thought of that?
Okay,
comfortable.
Sure, that was it.
No, 50-to-1. I think it's still going to be expensive.
Yeah,
purple.
50-to-1.
It's 3,000. Anyone out there that?
No, that's a good thing. I mean, oof.
Yeah. To me, its setup is looking bullish. That's what I'm seeing. I'm seeing a nice bullish setup, and I think that Powell is going to come out. Look, it is an election. It is an election year. It is the bottom line. It doesn't really matter what your political affiliation is. We want to make money. I mean, that's for me personally. Is I guess capitalism first in my mind. So I would like to make money, and typically in an election year, this guy's not going to screw everything up.
All right. So wait a minute.
What?
What says Sal? What are you talking about? They expect 3 cuts this year. Is that what they're saying in their little release?
I didn't see that, but Sal was probably excited about it. It would be good. I don't know if I see that, but
when's Nvidia going to announce a split? I don't know. I'm a big fan of it being a stocky split. That was what I would do. Like that could easily
do 4-to-1.
Well, you wouldn't want to do a 10-for-1 because then you're $70 stock, and of course they want to be a premium, and be more institutionally oriented. You could do a 5-for-1.
Yeah. That'd be a little concerning though, because I guess the question is everyone keeps asking.
All right, so they confirmed 3 cuts. Okay, this market's got to be just rocking then. It should be just smoking.
Right. Well, it is. That's what I.
There you go.
That's what I. Yes.
All right.
We got about 14 minutes till the press conference. I am looking.
You know what? If you're going to take profits, man, don't wait for this guy to open his mouth.
100%. And don't wait for Dutch.
You got the move. Got the move. Don't wait for me. Don't wait for him. Go.
And don't ask what the stop loss is.
Oh,
do not.
Don't even.
I figure he's not going to whack me while we're on screen. There's like a 20% chance. But yeah, let's see. I mean, the market was kind of flat. That now it's just ripping up. I mean, everything's just ripping. So how can we make some people money right now? What can we do here? Or take the money. So we got the NASDAQ up 55. We got Dow up 85. We got S&P up 8. Definitely some things moving and shaking right now.
You know what? I don't know. This guy, I mean, normally I would say that from this, I mean, a normal situation,
to get in front of him at this point.
short this.
Right.
I would short this right here normally, but I think they might be saying, hey, look, man, if we're going to be political, let's just go ahead and make this rock and roll and, help our ice cream eating friend try to get back into the office.
Well, here's what I think. I think that if Z's still in the chat, he should put a message down there in the chat box and see what he says. See what he says about it.
Don't leave us hanging out here.
I mean,
if like my coach used to say, if him and me put our head together, we'd form a rock pile. We need some brains in here. Come on.
That's exactly right. We want to spend some money right now, and I'm just looking where I should invest some capital. Well, actually, I don't know. I'm kind of thinking with you. It might be time. If you've got profits, if you're happy and you're not long-terming this stuff, you've got to make some decisions because I mean, it is a little iffy for me.
I think I'm going to light some. I'm going to light some.
If anyone ever, Dutch has not talked about the Palo Santo in a while, and I always thought that this guy was.
I got some insights.
Full of crap with all this stuff.
So this is like hippie chick.
Here you go. I'm going to show.
This is all about.
Here, look.
Okay, so this is the Nag Champa. See?
Okay.
This is the good stuff. Whoa. Here we go. We got to put it in the. See, we got the little dude over here, right? So this is my little skeleton dude, and he's got his. He holds it for us. See him right here. Here we go. This is what brings the good luck to carnivore. We put that in there. He's getting a little burned up, isn't he? Okay, come on now.
You'll see his crystal ball when he says he's looking in the crystal ball. Like I said, I thought that was one of the things that the guy was just full of crap.
Put that thing back.
Oh, okay. Well, at least he enjoy it. I got like 2 likes
live
off it.
Cam. That's a real crystal ball from a real gypsy in Ojai, California, and everybody knows it.
You can't see it because I put the camera back, but it's okay. Let's see here. Got Dow pulling back a little bit. Burton, thoughts on GCT at 28? My thought on GCT is it better not be at 28. That's my thought.
What?
He said thoughts GCT at 28.
I don't know. Lisa,
well, it better not be at 28.
Lisa she likes this.
Well, I'm glad I showed you, right?
She likes the inside. You got to get rid of the evil spirits, Lisa. See, she's smart.
We picked up a camera somehow. Now we got 4.
We got 4 cameras.
There are 4 Dutches and Godfathers.
We have hidden cameras.
we are at 4.
It's that drone that's coming over in the window.
Ours not participating. Dutch. Well, what about the thoughts on GCT? Because I know you brought it up. That was funny, not funny, about the call for a carnivores.
I don't know
about if you were in GCT.
I didn't say that.
No, you said you're not in GCT, and why are some of us?
I said that you can't trust a stock that acts like that. They need more coverage. They need more research coverage. They need more market makers. They need more participants.
Oh, that's not good.
It's all over the place.
This is a horrible idea. Why am I in this? Look at this. Down 5% so far.
Well, we're not.
I know you're not in it, but
no, that's why I don't want to touch that thing. It's spooky, man.
Well, I was hoping that maybe the Palo Santo would have helped us a little bit. Let's see, but we do have the someone said down in the chat that TLT isn't playing along,
not catching a bid.
Yeah,
that's what they said.
Yeah.
Well, let's see what we got here. All right, so we've got
9 minutes. 9 minutes.
Let's see here.
I kind of agree with Lisa, and I understand what people have said on television, and I don't know. I don't know if I see
21.75 on gold. That's moving.
That
up.
is insane.
That's moving up pretty nice. That's good. 10 years at 4.25. That's not bad. It dropped hard, kind of came back now. So 4.25. Love to see the 10-year kind of drop back to 4.3. I mean to 4.0. I think we could see that move start to happen. It'll catch a bid. It's catching a bid. It'll be fine. I think bonds will catch a bid because they basically just came out and said they confirmed 3 rate decreases. Well, come on.
Yeah.
I guess that means no matter what, they made the choice, Trader Z. You wanted them to make a choice between inflation and
we're a lot of people
and lower rates, and you know what? They made their choice for you right there. That's it. I think we got a good market to trade.
Yeah, look at it.
This is a good market to trade, people. Don't be afraid. Get in the water. The alligators are gone.
So, y'all, we are going to have this speech up. We're going to have it. We're not. So I guess you just got to watch it.
Are we going to go now?
No, I'm going to call him. Go 8 minutes early.
What? 8 minutes?
We got 8 minutes. Look at D-West.
So you got me all nervous.
Hey, look at 22%
stuff. 9 minutes.
Well, I get amped up. You get people excited. That's why we all get around the Dutchman. We get excited.
You got to have some passion, or you're worthless. For Christ's sake. Come on. What was that? Oh, I saw this like motivational speaker guy the other day on YouTube, and he was like, what do you do? Come home to your wife and every day say, "Oh, it's such a bad day," and the boss doesn't like me, and I lost a couple of sales because the finance guy doesn't like me. I mean, is that what you do? You come home to your wife like that? And he was like screaming at him. He's like, nobody wants to be around a loser like you. Come on. I mean, this is a motivation.
No, I know. You sent it to me.
This guy's amazing.
I
like this guy. He's a Viking.
I was glad that my son was asleep. Greg, we can't tell you really what to do. I'm telling you that I definitely lightened up on a couple of things myself, but Dow is now at the high of the day. People are excited. People are just excited.
No, the answer is you go and take profits.
Correct.
When you get a pop like this, before the guy opens his mouth and starts raining on the parade.
Correct. Yeah, I lightened up right.
That's what we would do. That doesn't mean it's what you should do. It doesn't mean it's the right move. Okay, we can be wrong.
Right. So about 205, 210. I lightened up on some stuff.
Oh yeah.
I figured it would come back, but it doesn't mean that I'm not getting ready to jump back in.
I see Randy's on board. Randy. IWM, baby. Moving on. Are people yelling down there?
No, I don't know what's going on.
Anybody getting hurt? Are we ready to go?
No,
are we live? Is anybody hearing us? I don't even know anymore.
Yeah, they hear us. We slept.
I thought you were saying it's a great try. I was saying, yeah, look, I'm saying if you're heavy like in margin and stuff, and mom won't answer the phone and give you more margin money, then you got to pay off your margin. Do it when you get the bounce.
That is very true. That is definitely very true. Let's see. What are we seeing? What can we tell them before we get ready to go? Pulled back a little bit, but now it's going up. I mean, the market's ripping. Look, we're at 92. We're at 92 on the Dow, 39.212, 16.233. You demand. Thank you. What about Dutch?
No, he wasn't talking to you.
What about my boy Dutch here?
He wasn't talking to you.
He wasn't talking to you. You don't know.
You don't know.
You don't know. Tesla coming up too. Ha! Light more Paolo, for the love of God.
Tesla.
Dude, can you believe this is the problem with long term? I'm going to
Hey,
tell you what.
Steve.
Oh, look.
All right.
This
Steve,
Macy
like-
loves the screens. Look at we got Macy's
All right,
phone.
no, I got like this. Stevie M. Okay, Stevie M. Here's what he says. Subscribing now. Love the way you guys roll. No ties, no big words, just doing it. That's right. No ties. No stupid suits with ties. Goofballs.
I cannot.
Bunch of losers that are on TV talking like all kinds of fancy words that try to confuse everyone and think they're super smart.
Well, yeah.
Oh, I went to MIT.
Well, there was a lot of things that Dutch told me to write.
I went to those schools too. You know what? I don't remember much about them because I was pretty much in limos going to like Atlantic City.
Yeah.
But
you know, that's one of the reasons why that's one of the reasons why
Let's
coming
go.
out here to the car. So y'all that are thinking, if you've got wives or something or significant others, that the reason why you can't come out to the academy is because it's in Vegas. Understand that this is to show a lifestyle, and we don't even have any time to get to Vegas. All right, we're here. We're living the lifestyle right here on the compound. We don't have to go outside of these walls.
what I can tell you,
know?
is
So-
your wife can come.
Yeah, we got women here today.
We got wives here. We got lady carnivores that are here learning how to trade and trading live with us.
Well,
And
Monica
you know,
said we're disturbing the classroom.
what?
Monica said we got them laughing. So Z's probably in there talking about real stuff and actually going over the data while we're up here doing what we're doing.
You know, this is way more entertaining. Right, because he's over there talking about and they don't even.
Well,
they're
thank-
like, oh,
well,
my
thank
eyes,
God.
I can't talk. I'm so tired. I've been here 3 days.
No, thank God. Look, I have made more money with Z. I tell you what, I wouldn't know what to do without the guy, and Dutch wouldn't either. I tell you what, I'm the same type of personality. I'm like, all right, Z, I actually don't know what I'm doing, so please send something to me. I got to talk.
All right, so listen, the cannabis stocks, you want to know. So the cannabis stocks, yeah. So here's what's happening. Those are percolating. I was watching Canopy today. Hey, my battery's about to go dead on here, so you need to start playing.
The Powell, you just want me to just tell me? All right.
Powell's going to start talking, right? Pretty soon.
Yeah. 3 more
Anyway,
minutes.
if all of a sudden one of the cameras goes dark, it's because the battery's died on my laptop here, and I don't have a plug-in. So because we keep running around this place when there's not enough plugins.
That's it.
But anyway, yeah. I mean, look, the ladies love to come. I mean, if your wives say you can't go to Vegas, you'll get in trouble.
Bring them.
They can come.
Bring them.
And enjoy all the social activities as well. You know.
No, it definitely helps. It kind of keeps us in line too. So that's
Actually, my best friend from college, his wife said that she won't let him come.
yeah. I've had several
But
say
she
that to
had
me too.
But she had an experience
With Vegas.
Yeah, because they came here one time and he woke up in the middle of the night and went gambling.
Oh yeah.
And he lost like half their fortune or something.
What time did you go to bed last night?
Me?
Yeah.
Honest to God, I think I was in bed at 9.
Oh, it was
9:30.
You definitely was before that. But
Gotta go
yeah,
pretty
I think
early.
I was in bed by
Pretty
9:30.
Pretty
Yeah.
early, right?
Yeah. So
No, hey, we're not maniacs. We're not up all night.
No,
We don't
that's
do that
right.
kind of stuff. We got to wake up real early and do the trading. Are you ready?
Did you send an alert out?
What?
You just got an alert to add to CRNX.
Oh no, that was a while ago.
Oh, Dave,
Wait,
you might
add? I didn't say to add.
Oh yeah, no, that wasn't us. I don't think. Let me get this switched.
Somebody's hacking our stuff. Come on.
Let me get this switched over to Powell. So
All right.
sitting here-
Goodbye, everybody. We love you.
All right, let's until he goes on. We're gonna bring this over. All right, my friends, please, if you have not done this, please like the stream. Working hard for you all every day. Definitely appreciate you, carnivores. Appreciate you all help build the channel up. Definitely means a lot to us. All right, here we go. There's going to be about a 20-second delay, just so you know. I am getting ready. All right.
What?
Please let me know if you can hear this. Can you hear these people? And then I'll turn my stuff off. Well, so far no one's saying anything.
No, they're
so-
not talking yet. It's a room full of reporters.
All right. All right. Well, so far, nobody's saying anything yet. They're just sitting quietly. All right. So a lot of people say that it depends what color tie he comes out in. So let's see what happens. No, well, nobody's so far. No one's saying anything, Randy. Empty podium. So, it's funny for those that actually do this stuff on television. They're like, all right, all we got to do is get to 2:30, and then you can go. Oh, look at this guy. Here he comes. All right, I hear him. Powell is here, everybody. Jerome Powell.
Good afternoon.
Be dovish, damn it.
My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. The economy has made considerable progress toward our dual mandate objectives. Inflation has eased substantially, while the labor market has remained strong. And that is very good news. But inflation is still too high. Ongoing progress in bringing it down is not assured, and the path forward is uncertain. We are fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustainably strong labor market that benefits all. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Our restrictive stance of monetary policy has been putting downward pressure on economic activity and inflation. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are moving into better balance. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a solid pace. GDP growth in the fourth quarter of last year came in at 3.2%. For 2023 as a whole, GDP expanded 3.1%, bolstered by strong consumer demand as well as improving supply conditions. Activity in the housing sector was subdued over the past year, largely reflecting high mortgage rates. High interest rates also appear to have weighed on business fixed investment. In our summary of economic projections, committee participants generally expect GDP growth to slow from last year's pace, with a median projection of 2.1% this year and 2% over the next 2 years. Participants generally revised up their growth projections since December, reflecting the strength of incoming data, including data on labor supply. The labor market remains relatively tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 265,000 jobs per month. The unemployment rate has edged up but remains low at 3.9%. Strong job creation has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years, and a continued strong pace of immigration. Nominal wage growth has been easing and job vacancies have declined. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. FOMC participants expect the rebalancing in the labor market to continue, easing upward pressure on inflation. The median unemployment rate projection in the SEP is 4.0% at the end of this year and 4.1% at the end of next year. Inflation has eased notably over the past year, but remains above our longer-run goal of 2%. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as from measures from financial markets. The median projection in the SEP for total PCE inflation falls to 2.4% this year, 2.2% next year, and 2% in 2026. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are strongly committed to returning inflation to our 2% objective. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are coming into better balance. We believe that our policy rate is likely at its peak for this tightening cycle, and that, if the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We are prepared to maintain the current target range for the federal funds rate for longer, if appropriate. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we have seen on inflation and ultimately require even tighter policy to get inflation back to 2%. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. The committee does not expect it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably down toward 2%. Of course, we're committed to both sides of our dual mandate, and an unexpected weakening in the labor market could also warrant a policy response. We will continue to make our decisions meeting by meeting. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 4.6% at the end of this year, 3.9% at the end of 2025, and 3.1% at the end of 2026, still above the median longer-term funds rate. These projections are not a committee decision or plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals. Turning to our balance sheet, our securities holdings have declined by nearly $1.5 trillion since the committee began reducing our portfolio. At this meeting, we discussed issues related to slowing the pace of decline in our securities holdings. While we did not make any decisions today on this, the general sense of the committee is that it will be appropriate to slow the pace of runoff fairly soon, consistent with the plans we previously issued. The decision to slow the pace of runoff does not mean that our balance sheet will ultimately shrink by less than it would otherwise, but rather allows us to approach that ultimate level more gradually. In particular, slowing the pace of runoff will help ensure a smooth transition, reducing the possibility that money markets experience stress and thereby facilitating the ongoing decline in our securities holdings consistent with reaching the appropriate level of ample reserves. We remain committed to bringing inflation back down to our 2% goal and to keeping our longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and price stability over the long term. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you.
Steve Leisman, CNBC. Mr. Chairman, the projections show somewhat higher core inflation. They also show somewhat stronger growth. What should we infer from this notion that on average rates were kept the same this year, but inflation is higher and growth is higher? Does it mean more tolerance for higher inflation and less of a willingness to slow the economy to achieve that target?
Well, it doesn't. No, it doesn't mean that. What it means is that we've seen incoming, as I pointed out in my opening remarks, we did mark up our growth forecast, and so have many other forecasters. So the economy is performing well. And the inflation data came in a little bit higher as a separate matter, and I think that caused people to write up their inflation. But nonetheless, we continue to make good progress on bringing inflation down. And so.
When you, just to follow up, when you say that you're willing to either maintain the rate for longer, what is the tolerance of the Federal Reserve for inflation coming in above its 2% target?
So we're strongly committed to bringing inflation down to 2% over time. That is our goal, and we will achieve that goal. Markets believe we will achieve that goal, and they should believe that, because that's what will happen over time. But we stress over time, and so I think we're making projections that do show that happening, and we're committed to that outcome, and we will bring it about.
Rachel.
Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. You and others have been saying that relief on housing inflation is coming, but it still hasn't shown up meaningfully in the CPI or the PCE. Does that challenge your assumption about when the shift will finally break through, since it hasn't at that point?
So I think there's some confidence that the market rents, lower market rent increases that we're seeing will show up in measures of housing, services inflation over time. There's a little bit of uncertainty about when that will happen, but there's real confidence that they will show up eventually over time. But again, uncertainty about the exact timing of that.
And will you be able to get overall inflation down to target if housing doesn't break through quickly, and does that affect the timing for eventual cuts this year?
We will get aggregate inflation down to 2% over time. We will. And I would assume that what we'll continue to see is we'll see goods prices coming into a new equilibrium where they're going down perhaps not as quickly as they had been earlier this year, where housing services inflation will come back down as current market rents are suggesting will happen, and where non-housing services will move back down. Some combination of those three things, and it may be different from the combination we had before the pandemic, will be achieved and will bring inflation back down to 2% sustainably.
Nick Timmeros of the Wall Street Journal. Chair Powell, during your congressional testimony this month, you said that your test for making the first change to interest rates does not require you to be terribly comfortable that inflation is at 2% because interest rates are well above neutral. At the same time, you said here after the last meeting that the first cut is highly consequential. Can you reconcile these views for me? If rates are well above neutral, why would the first cut be highly consequential? Is that because you anticipate one cut would be followed by one or two more along the lines of the recalibration you made in 2019, which itself was modeled on the mid-cycle adjustment of 1995?
It's more, I would put it more in the context of what I said in my opening remarks, that the risks are really two-sided here. We're in a situation where, you know, if we ease too much or too soon, we could see inflation come back, and if we ease too late, we could do unnecessary harm to employment and you know, people's working lives. And so, you know, we do see the risks as two-sided. So it is consequential. We want to be careful. And fortunately, with the economy growing, with the labor market strong, and with inflation coming down, we can approach that question carefully and let the data speak on that. That's really what I was thinking.
How much of that inflation that we've seen so far this year do you chalk up to one-off calendar adjustment effects following a period of high inflation versus some change in the trend we saw in the second half of last year?
So I want to start by saying I always try to be careful about dismissing data that we don't like. So you need to check yourself on that, and I'll do that. But I would say the January number, which was very high, the January CPI and PCE numbers were quite high. there's reason to think that there could be seasonal effects there. But nonetheless, we don't want to be completely dismissive of it. The February number was higher than expectations, but we have it at currently well below 30 basis points core PCE, which is not terribly high. So it's not like the January number. But I take the two of them together, and I think they haven't really changed the overall story, which is that of inflation moving down gradually on a sometimes bumpy road toward 2%. I don't think that story has changed. I also don't think that those readings added to anyone's confidence that we're moving closer to that point. But we didn't. Last thing I'll say is we didn't excessively celebrate the good inflation readings we got in the last 7 months of last year. We didn't take too much signal out of that. What you heard us saying was that we needed to see more, that we could, we wanted to be careful about that decision, and we're not going to overreact as well to these 2 months of data, nor are we going to ignore them.
Hi, yes, Chair Powell. Could you speak a little bit more about the timing? Is there enough data between now and, say, May to be able to get the kind of confidence that you say that you still need? Or by June, is there enough data for you? Just give us a sense of your thinking there. Thank you.
Yeah, so we make decisions meeting by meeting, and we didn't make any decisions about future meetings today. Those are going to depend on our ongoing assessment of the incoming data, the evolving outlook, and the balance of risk. So I really don't have anything for you on any specific meeting looking forward.
But, just a question of, is there even enough data for you to be able to?
We'll take, things can happen during an intermeeting period, if you look back. Unexpected things. So I wouldn't want to dismiss anything. So I just would say that the committee wants to see more data that gives us higher confidence that inflation is moving down sustainably toward 2%. I also mentioned, and we don't see this in the data right now, but if there were a significant weakening in the data, particularly in the labor market, that could also be a reason for us to begin the process of reducing rates. Again, there's nothing in the data pointing at that, but those are the things that we'll be looking at coming meetings, and without trying to refer to any specific meeting.
Chris.
Hi, Chris Regaber, Associated Press. Thank you. In the projections, there is an increase in the neutral rate, as you know, and higher rates, a quarter point higher rates projected in 2025, 2026. Can you speak about what might be behind that? Is there a real sense here that the economy has perhaps changed in some way, that higher rates will be needed in the future? Thank you.
So you're right, they're pretty modest changes, but you're right, there was an uptick in the longer run rate, and also there's a 25 basis point increase in 25 and 26. In terms of are rates going to be higher in the longer run, if that's really your question, I don't think we know that. I think we think that rates were generally low during the pre-pandemic, post-global financial crisis era for reasons that are mostly, important, slow-moving, large things like demographics and productivity and that sort of thing, things that don't move quickly. But I don't think we know. My instinct would be that rates will not go back down to the very low levels that we saw, where all around the world there were long-run rates that were at or below zero in some cases. I don't see rates going back down to that level, but I think there's tremendous uncertainty around that.
Great. And just a quick follow on the projections, you also have 2.6% core inflation for the end of this year. It's already at, or you mentioned it being 2.8 in February. That doesn't sound like much disinflation at all. So are you still confident, or the last press conference you sounded pretty optimistic you would get more confidence to the end of this year. Is it right to say that this suggests you're not seeing a lot of disinflation this year compared to what we've seen 2023 and so forth? I
think that higher year-end number reflects the data we've seen so far this year, because you're now in this year. So I think that. Sorry, say your last part of your question again.
Are you still optimistic that you'll get the confidence you need this year?
I think if you look at the SEP, what it says is that it is still likely in most people's view that we will achieve that confidence and that there will be rate cuts. But that's really going to depend on the incoming data. It is. The other thing is, in the second half of the year, you have some pretty low readings, so it might be harder to make progress as you move that 12-month window forward. Nonetheless, we're looking for data that confirm the kind of low readings that we had last year and give us a higher degree of confidence that what we saw was really inflation moving sustainably down to 2%, toward 2%.
Gina Smilik, The New York Times. Thank you for taking our questions. Per your comment to Ann that a weakening in the labor market would be a reason to potentially cut rates, or at least a consideration in making a rate cut, would continued strength in the labor market be a reason to hold off on rate cuts? And just in general, if labor supply continued to rebound in 2024 the way it did in 2023, what would stronger hiring and possibly stronger growth mean for the path forward on policy?
Yeah, so if what we're getting is a lot of supply and a lot of demand, and that supply is actually feeding demand because workers are getting paid and they're spending, and that's, what you would have is potentially kind of what you had last year, which is a bigger economy where inflationary pressures are not increasing. In fact, they were decreasing. So you can have that if you have the continued supply side activity that we had last year with both with supply chains and also with growth in the size of the labor force.
But so strong hiring in and of itself would not be a reason to hold off on rate cuts?
No, not all by itself, no. I mean, you saw last year very strong hiring and inflation coming down quickly. We now have a better sense that a big part of that was supply side healing, particularly with growth in the labor force. So in and of itself, strong job growth is not a reason, for us to be concerned about inflation.
Neil. Hi, Chair Powell. Neil Irwin with Axios. How do you assess the state of financial conditions right now, and in particular, do you view the kind of easing in financial conditions since the fall as consistent and compatible with what you're trying to achieve on the inflation mandate?
So we think there are many different financial conditions indicators, and you can kind of, see different answers to that question. But ultimately, we do think that financial conditions are weighing on economic activity, and we think you see that in a great place to see it is in the labor market, where you've seen demand cooling off a little bit from the extremely high levels. And there I would point to job openings, quits, surveys, the hiring rate, things like that are really demand. There are also supply side things happening, but I think those are demand side things happening. We saw, that's been a question for a while. We did see progress on inflation last year, significant progress, despite, financial conditions sometimes being tighter, sometimes looser.
Michael McGee with Bloomberg Radio and Television. Can you give us more color on how the committee is thinking about inflation dynamics now? What we've seen at the beginning of the year, are they more one-off increases that will fade, or is there more of a secular turn with goods prices rising again and service prices staying sticky? And also, housing prices have been sort of the Godot of this cycle, in that you keep expecting them to go down and they don't. How does the committee see this playing out forward since you've raised your inflation forecast?
So I see the committees looking at the 2 months of data and asking the same question you're asking and saying we're just going to have to see what the data show. As I mentioned, you can look at January, which is very high reading, and I think many people did see the possibility of seasonal adjustment problems there. But again, you got to be careful about dismissing the parts of the data that you don't like. So then February wasn't as high, but it was higher. So the question is, what are we going to see? We tend to see a little bit stronger, this is in the data, a little bit stronger inflation in the first half of the year, a little bit less strong later in the year. We're going to let the data show. I don't think we really know whether this is a bump on the road or something more. We'll have to find out. In the meantime, the economy is strong, the labor market is strong, inflation has come way down, and that gives us the ability to approach this question carefully and you know, feel more confident that inflation is moving down sustainably at 2% when we take that step to begin dialing back our restrictive policy.
Well, you've talked about the desire to have confidence that inflation is continually moving down. Has the recent numbers we've gotten for inflation data dented that confidence at all?
It certainly hasn't improved our confidence. It hasn't raised anyone's confidence, but I would say that the story is really essentially the same, and that is of inflation coming down gradually toward 2% on a sometimes bumpy path, as I mentioned. I think that's what you still see. We've got 9 months of 2.5% inflation now, and we've had 2 months of kind of bumpy inflation. We were saying that it's going to be a bumpy ride. We consistently said that. Now here are some bumps, and the question is, are they more than bumps? And we can't know that. That's why we are approaching this question carefully. It is very important for everyone that we serve that we do get inflation sustainably down. And I think the historical record, you know, every situation is different, but the historical record is that you need to approach that question carefully and try to get it right the first time and not have to come back and raise rates again, perhaps, if you cut inappropriately, prematurely.
Go to Edward.
Thank you, Mr. Chairman. Edward Lawrence with Fox Business. I wanted to ask you, you received a letter from, the Federal Reserve, first independent body, understanding Congress has oversight over that. You received a letter from Senators Elizabeth Warren and Sheldon Whitehouse that said, calling on you to lower interest rates, to cut interest rates, because it says, quote, the potential that it may remain too high for too long has halted advances in deploying renewable energy technologies and delayed significant climate and economic benefits from these projects. So has higher interest rates caused that?
Have they? Well, first of all, I respect our, in our system of government, it is Congress that has oversight responsibility over the Fed. We place a tremendous amount of importance on our engagements with Congress and always treat them with great respect. In this case, I would say those are, our mandate is for maximum employment and price stability and the other things that we do. And that's what we're trying to accomplish. We're trying to do that in a way that sustains the strong growth we're seeing, the strong labor market we're seeing, but allows us to make further progress with inflation. That's how we can best serve the public and leave the other issues, which in many cases are incredibly important, such as those you mentioned, leave those to the people who have responsibility for those.
There was another letter from 24 lawmakers saying that the higher rates are squeezing the working people. How do these letters affect what you guys are doing policy-wise?
We receive these letters with respect, and we write careful responses and address concerns. We listen, again, because we're talking to the people who in our system of government have oversight over our activity. So but at the end of the day, we take that on board, but we have to make our judgments and we have to stick to our knitting, which is maximum employment, price stability, supervise and regulate the banks, work on the payment system, the things that we do.
Claire.
Thank you. Claire Jones, Financial Times. Thanks a lot for the opportunity to ask a question. As chair of the FOMC, would you want to see unanimity on the committee or something close to it, meaning no more than one dissent before you begin cutting rates? Thank you.
We're a very consensus-oriented organization, and we do try to achieve consensus and ideally unanimity. People do dissent. It's something that happens. Life goes on, and it's not a problem. We've always had dissents, and so and you respect thoughtful dissents very much. It's like you may not agree with some arguments, but you really want to understand them. So you may read a book that takes a position that you have long opposed, just to understand that book. So I treat dissents with real respect as well.
So Simon, what would you say?
Simon Rabinovich with The Economist. Can you hear me?
Yes.
Okay, great. Obviously, inflation is some ways away from target. Unemployment, though, if you look at the projection for the full year, 4.0%. In February, we were already at 3.9%, so quite close to the median projection. Are you concerned at all that, notwithstanding the very strong jobs growth, that in fact there may be some cracks appearing in the employment market? You talked about a significant deterioration in the labor market being a condition for easing rates. What would constitute that in your books? Thank you.
So we, of course, monitor it's one of our two goal variables. We all monitor the labor market very, very carefully, and I don't see those cracks today. And we follow all the possible stories that are out there about there being cracks. But the overall picture really is strong labor market. The extreme imbalances that we saw in the early parts of the pandemic recovery have mostly been resolved. You're seeing high job growth. You're seeing big increases in supply. You're seeing strong wage growth gradually moderating down to more sustainable level. In many, many respects, things are returning more to their state in 2019, which we can think of as normal for this purpose. That's job openings and quits, and surveys of workers and businesses are always interesting on this. How tight is how easy is it to find a job? How easy it is to find a worker? Those surveys have both come down. So the labor market's in good shape. You do see things like the low hiring rate, and people have made the argument that if layoffs were to increase, that would mean that the net would be fairly quick increases in unemployment. So that's something we're watching, but we're not seeing it. Of course, initial claims are very, very low, and if anything, have tracked down a little bit. So watching it carefully, don't see it. And when I say something, I use the term unexpected weakening in the labor market. So, we do expect the unemployment rate to, the forecast is that it would move up, I think, closer to what we see as the longer run sustainable level. That's just people's forecast, individual forecasts. But we're talking about something that's unexpected. That's where I'll leave it, though.
Steve Matthews with Bloomberg. You mentioned at the beginning of the press conference that the committee felt it might be appropriate to slow the pace of asset runoff fairly soon. I'm wondering, when you say fairly soon, does that mean that the committee would meet about this again in May, and a decision could be reached that soon? And I was wondering if you could also just describe the scope of what the committee is discussing here. You're at $95 billion of caps right now. Would that be cut about in half or something in that nature? Thank you.
So that is what we're discussing, essentially, and we're not discussing all the many other balance sheet issues. We will discuss those in due course, but what we're really looking at is slowing the pace of runoff. There isn't much runoff among MBS right now, but there is in treasuries, and we're talking about going to a lower pace. I don't want to give you a specific number because we haven't had an agreement or a decision, but that's the idea, that's what we're looking at. And in terms of the timing, I said fairly soon. I wouldn't want to try to be more specific than that, but you get the idea. The idea is, and this is in our longer run plans, that we may actually be able to get to a lower level because we would avoid the kind of frictions that can happen. Liquidity is not evenly distributed in the system, and there can be times when, in the aggregate, reserves are ample or even abundant, but not in every part. And those parts where they're not ample, there can be stress, and that can cause you to prematurely stop the process to avoid the stress, and then it would be very hard to restart, we think. So, as something like that happened in 19, perhaps. So that's what we're doing. We're looking at what would be a good time and what would be a good structure. And, fairly soon is words that we use to mean fairly soon.
And will there be a discussion about returning to an all treasuries balance sheet at some point?
So that our longer run goal is to return to a balance sheet that is mostly treasuries. I do expect that once we're through this, we'll come back to the other issues about the composition and the maturity and revisit those issues. But it's, not urgent right now. We want to get this decision made first, and then we can, when the time is right, come back to the other issues.
Victoria.
Hi, Victoria Guido with Politico. Also on the balance sheet, can you talk a little bit about how the outlook for the banking sector might impact your balance sheet plans? Do you worry that as deposits start to shrink that we could see more turbulence?
We'll be watching carefully, but one of the reasons we're slowing down, we will soon enough, fairly soon, I should say, slow down, is that we want to avoid any kind of turbulence. I wasn't thinking particularly about banking sector turbulence, but we had some indicators the last time. This is our second time in doing this, and I think we're going to be paying a lot of attention to the things that started to happen and that foreshadowed what eventually happened at the end of that tightening cycle, where we wound up in a short reserves situation, and we don't want to do that again. And I think now we have a better sense of what are the indicators. It wasn't so much in the banking system as it was around, for example, where federal funds is trading relative to the administered rates, and where secured rates are relative to the administered rates, those sorts of things. We will always be watching the banking system for similar signs, though.
Well, is it also because you're not sure exactly how the reserve supply will react once the overnight reverse repo facility, drops nearer at zero?
Well, I think we broadly think that once the overnight repo stabilizes either at zero or close to zero, that as the balance sheet shrinks, we should expect that reserves will decline pretty close to dollar for dollar with that. That's what we think.
Go to Jean.
Hi, Chair Powell. Jean Young with M&I Market News. I wanted to ask also about the balance sheet. You said that starting the taper sooner could get you to a smaller balance sheet size. Does that mean you don't have to make a decision on when to end QT at this point? And will you be setting up the process for deciding that sooner, or will you wait until we're close to the end?
So it's sort of ironic that by going slower you can get farther, but that's the idea. The idea is that with a smoother transition, you'll run much less risk of kind of liquidity problems, which can grow into shocks and which can cause you to stop the process prematurely. So that's where, in terms of how it ends, we're going to be monitoring carefully money market conditions and asking ourselves what they're telling us about reserves. Are they, right now we would characterize them as abundant, and what we're aiming for is ample, and which is a little bit less than abundant, right? So there isn't there's not a dollar amount or a percent of GDP or anything like that where we think we have a really pretty clear understanding of that. We're going to be looking at what these, what's happening in money markets, in particular, a bunch of different indicators, including the ones I mentioned, to tell us when we're getting close. Then, though, you reach a point, ultimately, where you stop allowing the balance sheet to run off, but then, from that point, there's another period in which non-reserve liabilities grow organically, like currency, and that also shrinks the reserves at a very slow pace. So you have a slower pace of runoff, which we'll have fairly soon. Then you have another time where you effectively hold the balance sheet constant and allow non-reserve liabilities to expand, and then that ultimately brings you ideally in for, brings it into a nice easy landing at a level that is above what we think the lowest possible ample number would be. We're not trying for that. We want to have a cushion, a buffer, because we know that demand for reserves can be very volatile, and we don't want to, again, find ourselves in a situation where there aren't reserves. We have to turn around and buy assets and put reserves back in the banking system the way we did in 2019-20.
Hi, Nancy Marshall-Genzer with Marketplace. Chair Powell, you said you're waiting to become more confident that inflation is getting to your 2% goal before you cut rates. Can you just sum up more specifically what data you're looking at that would give you that confidence?
Sure. So most importantly, we're looking at the incoming inflation data and the contents of it and what they're telling us. So that'll be, and also the various components. So obviously that's what we want. We want more confidence that inflation is coming down sustainably toward 2%. And I mean, of course, we'll also be looking at all the other things that are happening in the economy. We'll look at the totality of the data, including everything essentially, as we make that assessment. But the most important thing will be the inflation data that's coming in.
Well, are there things that you would give more weight to, like wages?
Wages is one thing. We don't. Our target is not wages. It's really inflation. We would look to the fact that wages are still coming in very strong, but they've been wage increases. That is to say, wage increases have been quite strong, but they're gradually coming down to levels that are more sustainable over time, and that's what we want. We don't think that the inflation was not originally caused, I don't think, mostly by wages. That wasn't really the story. But we do think that to get inflation back down to 2% sustainably, we'd like to see, continuing gradual movement of wage increases at still high levels, but back down to levels that are more sustainable over time.
Let's go to Greg.
Thank you. Greg Robb from MarketWatch. Chair Powell, could you say at this meeting whether there were more officials who wanted to be careful and go slower about rates than were at the last meeting? Was there that sense of maybe it's smart to wait? Thanks.
I guess I'd put it this way. If you look at the incoming inflation data that we've had for January and February, I think very broadly that suggests that we were right to wait until we're more confident. So I think I didn't hear anyone dismissing it as not information that we should look at or anything like that. So I think generally speaking, it does go in the direction of saying yes, it's appropriate for us to be careful as we approach this question.
Brendan.
Thanks, Chair Powell. Brendan Peterson with Punchbowl News. I wanted to ask you about central bank digital currency stuff. We've been hearing a lot from Republicans in Congress about what the Fed is or isn't doing in a digital dollar. But folks, I know you have said to Congress that you are going to wait for approval before the Fed does anything, launches anything. But folks like House Majority Whip Tom Emmer have said that the Fed is either actively researching or hiring personnel to study the implications of a CBDC. Can you give us any clarity on what the Fed is doing right now on a digital dollar?
Sure. So I think we've been pretty transparent on this, but I'll try harder. So we are not getting ready to, we haven't proposed, we haven't come to a conclusion that we should propose or anything like that, that Congress consider legislation to authorize a digital dollar. And it would take legislation by Congress signed by the president to give us the ability to do what we think of as a CBDC, which is really a retail CBDC with the public of it. So we're just a long, long way from that. What we are doing, and I think what every major central bank is doing, is we're trying to stay in the frontiers of what's going on in digital finance. And it has many, many different areas. It has applications in wholesale finance, in the payment system. And so to serve the public, these issues have become very front burner in the last 5 or 6 years. We need to be knowledgeable about all that. So we actually do have people trying to understand things that are, but it's wrong to say that we're working on a CBDC and then we've secretly got a lab here where we've got one and we're just going to spring it on Congress at the right moment. We don't. I haven't at all in my own mind made a decision that I think this is something the U.S. should be doing. I just think it's something we need to understand, and we do have people who are keeping up with that as part of the broader payments landscape. That's how I would characterize it.
Mark.
Thank you. It's Mark Hamrick with Bankrate. Mr. Chairman, April 27th will mark the 13th anniversary since a Fed chairman began holding regular news conferences. How important has that higher transparency been in your view, both for the proper functioning of the central bank and also in accomplishing your mission? And is there more that you and your colleagues can do on the transparency front, and what might that look like?
I generally think, this movement actually started, 30 years ago, when some academics posited that a more transparent central bank, if the public understands your reaction function, the markets will do your work for you. They'll react to the data. And so it all happens that way. And so there's been a march toward greater and greater transparency. And that certainly Chairman Bernanke advanced that, so Chairman Greenspan did, Chair Yellen did. And so we went from four press conferences a year to 8, so now every meeting really is live now. I think that's a good innovation. I wouldn't want to turn it back. We also have done a bunch of other things. We have an annual supervision report, financial stability report. There's a long list of things that we've done. I think nothing comes to mind as really desperately in need of doing at this moment. We're very transparent. We have no shortage of FOMC participants speaking to the public through the media. And so that channel is full, I would say. So I think it's generally broadly helped and made things better, but not every day and in every way.
Well, to follow up, has there ever been a day where you wanted to put that genie back in the bottle somewhat?
Of course not.
Let's go to Jennifer for the last question.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. Not to harp too much more on confidence and inflation, but you did say earlier in this press conference that the recent inflation data hasn't raised anyone's confidence. But when you testified before the Senate a couple weeks ago, you told lawmakers that you are, quote, not far from receiving the confidence needed on inflation to begin cutting rates. So are you still of that belief or not? What are we to take by those words, not far?
So let me say my main message at that in those 2 days of hearings was really that the committee needs to see more evidence to build our confidence that inflation is moving down sustainably toward our 2% goal, and we don't expect that it will be appropriate to begin to reduce rates until we're more confident that that is the case. I said that any number of times, so those were kind of the main part of the message. We repeated that today in our statement. I also, to the language you mentioned, I really pointed out that we had made significant progress over the past year, and what we're looking for now is confirmation that that progress will continue. We had a series of inflation readings over the second half of last year that were really much lower. We didn't overreact, as I mentioned, but that's what I had in mind.
But given that you said that PCE for February, 2.8%, the estimate, and that we have been seeing PCE, core PCE, coming down by 10% every month, wouldn't you be at about 2.4% this summer, June, July, to a point where you could cut then?
Well, we'll just have to see how the data come in. We would, of course, love to get great inflation data. We got really good inflation data on the second part of last year. Again, we didn't overreact to it. We said we needed to see more, and we said it would be bumpy, and now we have January and February, which I've talked about a couple of times. So, we're looking for more good data, and we would certainly welcome it.
Thank you.
Thank you.
Thank you.
All right. Well, that was fun, huh? So definitely you couldn't get a more bullish sentiment than that was. So appreciate you all watching, tuning in. Thank you very much. Definitely want to thank you all. We will let you know as soon as we get another Dutch Masters Live up and running. We've got a couple more things in the works. We will put that all out. I just wanted to put all 3 cameras out And so just wanted to say thank you. Let's see what happens next. Y'all carnivores, get ready for the wrap tonight. If you are not a subscriber, remember that you get 2 full weeks free, complete access into all of our processes, our alerts, our live streams. And also, if you use promo code LIVE, L-I-V-E, you would get 50% off your first month of paid subscription. Thank you all. Have a great day. Happy trading, carnivores. Talk to you later.